Analysts are talking about the worry over the US economy still weighing on investors' minds ahead of those GDP figures due out tonight. So let's speak with Al Fullerton from Aliom Financial, who joins us now from the Sydney CBD studio. And Al, I suppose what we could say is that there's this real tug of war that we're noticing between the economic data in the United States and then the US reporting season.
Hi, Brooke. Yes, there is a dichotomy at the moment in this tug of war between the US reporting season and this economic data. And it seems we had more conviction when we had the European bank fears and this double dip fears in the US. At the moment, as Julie mentioned, there are a lot of investors sidelined. We're seeing positive and negative data really sort of moving against each other. So the European numbers are coming out there. The confidence is up again a few points. We've seen the German unemployment falling for the 13th month in a row. You know, Germany's really leading the charge over there. And adding another 20,000 jobs. So look, it's really positive data flow running against some negative and some jitters there. And if anything highlights that, it's the fact that, you know, Colgate Palmolive fell 7% overnight, and so it seems we all need an iPhone, but not so much shampoo.
We're hoping people are using toothpaste and all the rest of it, because it's a bit scary if demand's dropping for them, as Carson was saying earlier in the channel. Talking about Australian markets though, how do you think we're going to be digesting all of that then today?
We're following these leads from offshore. It's jittery. We're lacking direction. We're lacking conviction. As we saw yesterday, we really had to wait for China to get on the map before we started to take a direction and have that afternoon rally. So again, we're going to see the markets off. We've seen some profit taking in the financials. We've seen a few sectors supported there. Energy bounced overnight, but really it's this real lackluster confusion session, and I don't think we're going to see that replicated again in this afternoon rally, especially in light of the US GDP out tonight.
Okay, so do we get nervous ahead of it? You know, how do we trade ahead of it? And also knowing that it's end of month territory too?
That's right. Look, I can't see any real direction coming to the market. How you play this is the number of sectors which have been oversold. The mining service sector I really do like at the moment. I feel that's a great hedged exposure to the resource sector. So that's certainly an area which continues to impress. I think copper, you know, remains on the front cover of Vogue, and that's really on those 2011 shortage stories. So look, copper remains a great play there, and Oz Minerals a really outstanding play in that sector. And another way I like to play it is by some of these African stocks, a bit of exposure to Africa. I think, you know, Africa is oblivious to these global concerns, and they don't take any direction from Europe or the US. So stocks like AFR, African Resources, is a great play, and Riversdale Mining with their Mozambique exposure.
Okay, and so that's with your African thoughts, or, you know, getting away from all the other troubles, I suppose. What about the Australian reporting season coming up? Because that's not far off. Are you positioning ahead of that, or are you suggesting that people make moves ahead of that?
Look, I think next week people are going to start to take a view there, and our reporting season will give us a chance to focus domestically. I think it's a great opportunity. I think there's going to be some good volume in the market. We've already seen some good value changing hands this week. There's been some offshore interest in our markets already this week, as we have seen. So look, I think it's a great time to focus domestically, and I think there's going to be some very interesting outcomes.
Okay, any other stocks that you're looking at ahead of that? I mean, because people want to jump on this, they jump ahead of it, I should say.
That's right. Look, there are a couple of stocks there. I think Qantas might be one to keep an eye on. If you look across the board, analysts are very bullish on this stock. Excuse me. I think that they certainly might have a good result there in light of these economic upbeat and a bit more of a positive investor and consumer sentiment. So the Qantas would be one to watch there. I also, obviously, the BHP and the miners, the Rios, they're also certainly another play there, which will give you some good exposure into this reporting season.
Can I ask you quick thoughts as well on Macquarie Group? Because just as you're speaking out, we can see the shares have opened even more than 5% lower. I think initially they were down as much as 6%. They're talking about the fact that if market conditions don't improve, you know, you're looking at 2011 profits being impacted. You know, how do you look through this result, and what's your view on Macquarie right now and the conditions that it does face?
Because it's a case of, you know, under-promise and over-perform. So of course you do a cautious outlook there. You know, Macquarie are a smart outfit. They've reconsolidated. They're focusing on 2011. There is an uncertain outlook. So in terms of their forecast, and I haven't had a chance to look through this, but I think that it's a fair play to be really cautious on that. And yes, there are uncertain times ahead. So look, the markets are jittery. So as we've seen time and time again, that any sort of negative or slightly bearish tones will be sold down.
I mean, the stock's struggled for such a long time. It just really hasn't even picked up at all. I shouldn't say at all since the sell-off. But look, I can see they're up about 8% since the start of the month, but really in the scheme of things, is this a stock that you like the look of, would go near?
Oh, look, we've got to remember there's been a huge concern about the entire global financial sector as a whole. So, Macquarie's not alone there. There's been a number of banks that have been sold off there in terms of concerns, in terms of profit warnings. So, look, Macquarie does slot into that line. I think, they're certainly a well-run outfit. They did do some spend in the US and looking for this global exposure there. So, it's a stock that we've been focused on the domestic for, but Macquarie certainly is one to continue to look at. But let's not forget that we've only just come out of these European bank concerns, so it's only fresh off the plate. So let's just wait and see for a bit more news from the sector.
Thanks so much. Great to speak to you, Al.
Thanks, Brooke. Have a nice weekend.
You too, Al Fullerton from Aliom.